His Excellency the President presented the 68th budget in Parliament today. The budget contained the government's development priorities for the period 2015 to 2017. The government is hoping to achieve a growth rate of 8% and maintain an employment rate of 97% of labor force by 2020 and to reduce the budget deficit to 3% by 2017. The main objective of this video is to provide a summary of the tax changes presented in today's budget, commencing with income tax. There were certain income tax exemptions given to the unit trust and BPO and IT sector, whilst tax concessions were also afforded to various industries. Tax concessions were afforded to the following: local manufacturers who have commenced businesses in 1970 and sustained competitiveness with imports, local sugar industry, existing companies undertaking expansion outside the Western province, and undertakings committing an investment of Rs 500 million. The turnover threshold applicable to a single SME company to be eligible to the 12% concessionary rate has been increased to Rs 750 million per annum. The currently specified time period restrictions for the applicability of the exemption under Section 17A has been further extended. New undertakings with a minimum investment of USD 2 million and engaged in manufacture of products for exports is to be granted a 100% depreciation allowance on capital assets and an exemption on dividend or deemed dividend tax for a period of 5 years. Further, a triple deduction for expenditure on research and innovation and brand promotion on exports have also been granted. The standard rate for VAT has been reduced to 11% from 12%, whilst the registration threshold has increased from 12 million per annum to 15 million per annum. However, the chargeability threshold for wholesalers and retailers has reduced from the current 250 million per quarter to 100 million per quarter. His Excellency the President also stated in his speech that he expects the supermarkets to reduce the price of essential goods by 10% in view of the fact of the reduction in VAT rate, fuel and electricity prices. The maximum tax applicable on employment income for all employees has been restricted to 16%. Further, all employers are mandated to now contribute 14% to EPF over the previous 12%. The withholding tax rate on interest income on savings of individuals and charitable institutions has been restricted to 2.5%, whilst the interest income of savings of senior citizens has been exempted completely. At the commencement of budget fever, there was much speculation on the possible changes to the duty structure on importation of vehicles. And indeed, this budget has introduced some changes. An excise special provisions duty on import of vehicles in lieu of all current multiple taxes at the point of import will be levied. The government expects to generate an additional revenue of Rs 5,000 million from this tax. Duty concessions to import new buses, an engine and a gearbox for any bus that has been in operation for at least 5 years has been afforded. Concessionary duty permits to high-income earning Sri Lankans working overseas for the importation of motor vehicles utilizing foreign currencies has also been given. Import tax on vans, trucks and lorries has been reduced. Customs-based taxes on electric cars are to be reduced by 25%. All in all, there has been considerable change in the duty structure of importation on vehicles. There have also been some change to customs duty and cess rates, which would help to strengthen the domestic value addition. There's been a reduction in import taxes on packing materials for exports. Taxes applicable on importation of infant milk has been abolished altogether. Increase on cess on export of tea, rubber, coconut, cinnamon and pepper in primary form. There's also an increase on cess on rubber imports by Rs 10 per kilo. And there has also been a consolidation of taxes on certain specified articles as given in Chapter 87 of the Customs Tariff. The body